This is David Harvey, and you're listening to the Anti-Capitalist Chronicles, a podcast that looks at capitalism through a Marxist lens. This podcast is made possible by Democracy at Work. Welcome to another episode of Anti-Capitalist Chronicles. I want to note here that Anti-Capitalist Chronicles is produced by Democracy at Work, which is a 10-year-old non-governmental organization dedicated to critical analysis and a search for a more equitable, democratic, and reasonable life. If you want more information about what we're doing, then you can get that from democracyatwork.info. And I want to thank all of those people who have joined in to listen because we are part of a process and a mission, if you like, to try and change the world. And I want to thank in particular those people who are offering us financial support. We much appreciate that and, of course, always need it. But nevertheless, this is still something which we offer to the public on a free basis. Now, today I want to take up a couple of issues. And the first is to pay a little more attention to the particular language that Marx deploys in his theorizing. And this is therefore going to be somewhat of a technical sounding session, but is one which I think is crucially important for people who wish to use Marx's analysis for a mode of thinking for themselves about what the future might bring. Now, Marx, particularly in his book, The Grundrisse, which is the notebooks that he prepared in 1857-58, adopts a very particular kind of language. And there are two words that crop up in the Grundrisse that I want to reflect upon. One is presupposition, and the other is to talk about posit, which is a strange word, and I'll come to explaining what Marx means by that in a minute. Now, by presupposition, Marx basically says this: you are studying an event, a crisis or outbreak of war or something of that kind. And generally speaking, in order to understand that event better, you go back to look at the precursors. What are the precursors that led into the event? So, for example, when Marx kind of says, okay, I'm going to look at the accumulation of capital and the circulation of capital as a mature system. But then at a certain point, he says, what were the precursors for that? Well, one of the precursors you notice immediately is you couldn't have the circulation of capital and the accumulation of capital without there being an adequate and quite sophisticated and well-regulated monetary system. In other words, the monetary system has to be really well developed before you can get to a capitalist circulation system. So this is what precursor means. And the other precursor, which Marx makes a lot of, is the existence of wage labor. Now, many people kind of take the view, well, okay, capital came along and created wage labor. Not true. Wage labor was a precursor. It had to be going on already even before circulation of capital came into being. And what Marx does in the Grundrisse is to point out the circumstances in which that wage labor could arise. It was mainly exchanged against revenues, against, for example, feudal lords on the estate employing wage labor to, help with the harvest, the military paying soldiers, the clergy paying the clergy people. So you start to say, well, actually, there's lots of revenues circulating in society, monetary revenues, and wage labor becomes very common in that context, even before capital accumulation is taking place, even before the formation of capital. So you have the money system and you have wage labor. The other thing you need is you have to have sophisticated commodity markets. If you want to become a capitalist and you want to produce something, you've got to be able to go out and buy means of production, raw materials, and all the rest of it. So you've got to have available to you a marketplace into which you can go and you can buy the necessary machinery or buy the necessary intermediate products. So all of these elements are precursors. And one of the things Marx does when he looks back historically is to say, what can we say about the history of those precursor moments? But when you've gone through that history, you find yourself in a situation where you have a well-developed monetary system, a well-developed commodity markets, and a well-developed wage labour market. So those are the three key precursors to the circulation of capital. So this is one of his modes of analysis. Now, you notice something here. Are you going to say that the circulation of capital was caused by these precursors? And the answer is no. It wasn't caused by that necessarily at all. But those precursors were necessary conditions, not sufficient conditions, but necessary conditions for capital accumulation to get on and become what it has become today. So the precursor then doesn't dictate what follows, but it sets up the conditions where something can happen afterwards. And when something does happen, you can then move backwards and look at the precursors and say what. So this is one part of Marx's technique of historical materialism. Well, we now come to the term posit, which is a frequently used term in the Grundrisse. So it's an unusual term. It's not one we use in common day language. It's not as if we go around talking about how we posit this or posit that. But Marx uses it in this sort of technical way by kind of saying, what happens when capital accumulation becomes well established? At that point, capital accumulation in turn becomes a precursor of something else. And Marx talks about that precursor of something else in the terms of something posits. So the question arises, what does the circulation of capital posit about the world going on that we're living in and what the future might behold? So the term posit then kind of says the circulation of capital in itself can be understood, but it posits certain things which are likely to follow on upon the circulation of capital. And given the laws of circulation of capital, you may even get to a situation where you say, well, without it positing this or that, those circulation laws of accumulation of capital could not really work. So the term posit becomes very important. What is it that the circulation of capital posits? Well, here, for example, is Marx actually talking about this in the Grundrisse. So I'm going to read you a passage because this is how he uses his argument. Okay, this is what he says. Money, then, insofar as it now already in itself exists as capital, so money is now being used as capital, is therefore simply a claim on future labour. This is what this posits. It posits a claim on future labour. It exists objectively merely as money. Surplus value, the new growth of objectified labour, to the extent that it exists for itself, is money, but now it is money which in itself is already capital. And as such, it is a claim on new labour. That is, what Marx is saying is that the accumulation of capital posits the formation of claims upon new labour. Here, capital already no longer enters into relation with ongoing labour, but with future labour. And it no longer appears as money, which is merely the abstract form of general wealth, but as a claim on the real possibility of general wealth, labour capacity, and more precisely, labour capacity in the process of becoming. Like the creditor of the state, every capitalist with his newly gained value possesses a claim on future labour, and by means of the appropriation of ongoing labour, has already at the same time appropriated future labour. Now, this is a little complicated kind of argument, but it's basically saying the following. Once capital is accumulating and the capitalist is engaged in the process of production of profit, production of surplus value, they need to get surplus labour. And surplus labour is in the future. So you're not merely looking at labour in the present, you are also developing this claim on future labour, so that the circulation of capital is also a claim upon future labour. Now, when we go on a little bit further, this claim on future labour, it can only be expressed by the formation of a credit system. So what Marx does in effect is to say, look, I've come up through the study of the precursors to understand how it is that capital circulates in the way it does. But as a consequence of that circulation process, capital posits certain development of future labour, and that future labour is actually going to be paid for on the basis of credit. So the credit system and future labour are posited, if you like, by the circulation of capital. So you see how Marx is using his language here. It is always to explore what are the precursors and what happens when the precursor creates a result which then itself is a precursor. So the circulation of capital, if you like, is a precursor to the formation of the sophisticated kind of credit system. Now, this is the way the language in Marx works, but it's also a mode of theorizing, which is, I think, very particular, because it invites us to kind of say, all right, let's look at the situation going on around us right now. What kinds of things are posited by what currently exists? What is the future likely to look like as we go further into what the history of accumulation of capital is about? And one of the things in that quote is to say, well, the future means that there has to be a future labour force. There must be future labour. Where is that future labour located? And then you find, oh, well, isn't it interesting? Marx actually talks about the formation of an industrial reserve army, that is, future labour, which is, if you like, created in such a way that it is stored in the wings waiting to be exploited. So that, in fact, the circulation of capital in the now cannot operate without there being a future labour force out there, so that claim for future labour can be exercised because the capitalist wants to employ more labour to create more surplus value. So this is, if you like, part of the way in which Marx argues. And it's not deterministic. It is, at any one of these points, you could kind of say, well, that didn't happen. But it likely should have happened, but something else happened instead. So it's not as if you're saying the whole trajectory of what Marx calls becoming, that is, evolutionary trajectory. The evolutionary trajectory is not dictated as if it is mechanically devised. It evolves, however, by the way in which the precursors become effects, and the effects become precursors of more effects. So one of the effects of this claim on future labour is to say there has to be a reservoir of future labour which capital can exercise a claim upon. Where is it? Well, part of it is created through unemployment. And unemployment can be created by technological change. So the technology is such that you can actually fire workers, and where you used to employ 1,000 workers doing something, with automation you can maybe do the same work with 100 workers. So you're liberating workers from their jobs, and you're then throwing them into the industrial reserve army, where they sit and wait to be picked up by the next round of accumulation. So that's partly where the surplus labour comes from. The other places it can come from are through proletarianisation of elements in the population that have not yet been incorporated into the proletariat. One thinks of peasant populations, of course, and so we've seen a decrease of peasant cultivation and peasant existence around the world, because more and more people have moved into the wage labour force. So peasant society is becoming very much under threat. Another great source for the surpluses of labour was, of course, the increasing employment of women in the labour force, which in many parts of the world has increased the labour force immensely. So how the claim on future labour is exercised and where it's going to be exercised is going to be a significant part of the story. And I've mentioned, unemployment, I've mentioned proletarianization. Colonization is another. That is, you find workforces which have not yet been introduced into the wage labour force and bring them in. For example, many close to 700 million workers were brought into the wage labour force when China joined the global system. So that's where the future labour stood. So this is, if you like, a way of thinking and arguing, which is I find very useful to myself, because I say to myself, okay, what is being posited by what exists here? And when you posit something, you do so in a way in which you kind of say something which seems minor and insignificant become major and clearly very, very significant. And here's one of the places in which I've been thinking about this in recent times. Marx uses at a certain point a category called fictitious capital. Now, it's a complicated category, but in essence, you can say that fictitious capital is capital which is in the process of becoming fully capital by going through that whole circulation process, but at a particular point has not yet completed that process. So it is a speculation. Now, the point here would be this. Every capitalist speculates. When they take money and they start to turn it into capital, and at the end of the day, they're going to end up with surplus value. But there's a speculation. So for that period of the day before it gets realized in the market and finally comes back in terms of money plus a profit, until it comes back, capital is in this case which is not yet valorized. Now, again, this is one of Marx's terms, which you've got to get used to. To valorize something means you actually keep it flowing within the circulation of capital. Stuff can escape from the circulation of capital. People can take it out and, build bombs with it and drop bombs. And as Marx says about military expenditures, it's just like sort of dumping value in the ocean. So a certain amount of capital can escape from the system, gets devalued, destroyed, something of that kind. But capital in general is such that it keeps on growing and it keeps on moving. But as it moves, there are always spaces in which it is moving where it has not yet become valorized in the market, by being realized through market exchange, or being valorized by going back into production and finding the capacity to expand production is there. So what we say is this, that in all capital is technically fictitious. There is this moment, if you like, when there's a speculation going on and you've not yet realized, and it could happen at the end of the day that you can't sell your product or something goes badly wrong with the production process and it doesn't get valorized, in which case the capital gets lost. Meanwhile, there is this other moment where capital is still operating and it hasn't yet been devalorized or lost, but it has not yet completed its circulation process. So when we say it's kind of speculative, we would say all capital is speculative. And given that it's speculative, it therefore generates this category of fictitious capital. There is a certain moment in the circulation of capital where all capital it takes on a fictitious form. And the fictitious form disappears as soon as you sell a commodity in the market or get it back into production and get it back into the production of surplus value. So the circulation of capital is always creating this arena of fictitious capital. And the assumption that Marx makes is that the speculation is short term, maybe a day or two, or if you're building a railroad, it might be several years, but there's a calculable period where the speculation is in motion and the speculation is ultimately realized, and therefore what is fictitious becomes real. It's like an imagined world becomes a real world, and that imaginary moment when you start the process is crucial, because we imagine that we can actually make a profit, and the capitalist is always imagining, and in fact even creates a whole discipline of imagineering, so that the imagining can at some point become real. So the fictitious capital problem is not a problem all the time. It keeps on going round and gets really valorized. Now, When we start talking, however, about fictitious capital, we also at that point will also be talking about the claim on future labour. Because the claim on future labour is also fictitious. It's not as if you know that there's any labour there. You have a claim upon a certain number of units of labour. Whether the labour is there or not, you may or may not be able to valorize your claim to future labour. Now, the same is going to be true of the credit system. You lend money and with the idea that at some point or other the money is going to circulate, it's going to generate surplus value, and part of that surplus value can then go back to the money lender as interest. So you've got a circulation process of certain kind. But again, there's a speculation involved here. But now the speculation is of a different order from the kind of speculation that exists on a daily basis where capital is launching money into circulation looking for surplus value. So this then creates a sort of situation in which money is out there, and in a complicated kind of system, money can be out there floating for a very long time. And after a bit, more and more fictitious capital starts to accumulate. That is, fictitious capital, which has claims on future labor, which has claims on future wealth, which has claims on future capital. So, and this fictitious capital becomes more and more significant. So one of the things that would then come from this is the idea that fictitious capital will start to pursue fictitious capital. I can actually start to trade my claims for future labor. I can trade my bonds on governments and my investments and so a whole world of fictitious capital gets built up. And the fictitious capital is about about capital which is going supposedly to yield something in the future, but at this particular time is still just wallowing around, and actually people start to exchange my fictitious capital against yours. You have claims to fictitious capital from X. I think that X is very risky, so I wanted to exchange my fictitious capital I have invested in X and trade it for investment capital invested in Y, and Y is very secure. So all the kinds of things like that. So we start to get a money market, a credit market, all those kinds of things, and we start to see larger and larger amounts of fictitious capital circulating, which have not yet been converted from imagined state into a real state. They're out there. And furthermore, we start to see a market created in fictitious capital. And fictitious capitals incur, and Marx mentions state debt as one of the forms of fictitious capital that exists. Basically, what you do is you invest in state debt, and the assumption is that state debt will be retired as the state gets more and more tax revenues from the kind of development that goes on with the borrowed money. But let's suppose the state goes bankrupt, in which case, we have a situation in which the state is not going to, the fictitious capital is not realized, and it gets lost. So that more and more fictitious capital that is sort of wallowing around funding state debt and funding corporate debt and funding personal debt and all the rest of it, more and more fictitious capital occurs in society till the point arises in which fictitious capital starts to become so massive, so huge, that it itself starts to become the nature of the problem. And the nature of the problem is different from the form of problems which arises when you just study the simple circulation of capital. Now, I have an analogy here, and I'm rather fond of these rather somewhat wild analogies, but it I think will illustrate the point. When you're looking at an economy, you'll see certain use values being produced, which are absolutely essential for the functioning of that economy. I think particularly, say, of energy. So you see the production of coal, you see the production of oil, you see the production of natural gas, you see the conversion of all of those into energy, and the energy is used to power the global capitalist system, and therefore we get a very, very strong economy on the basis of the inputs which are coming from the energy sector. The problem, however, is that this energy sector, when it's used, starts to produce certain byproducts. So there are certain byproducts that start to appear, particularly the emission of greenhouse gases, primarily carbon dioxide and methane. And we find, therefore, that the production system is producing not only profit and surplus value, it's also producing climate change. And this is therefore then becomes a serious problem. So again, one of the things I would do here is to say, what are the precursors to climate change as a problem? And clearly, one of the precursors is all of the use of that fossil fuel energy. And and then you go back and you say, what was the precursors of fossil fuel energy? Well, when capitalists were reliant entirely on biomass, there was a huge problem for its evolution, because back in the 17th and 18th century, capital was getting all of its energy sources from cutting down trees. But you have only a certain number of trees you can cut down, and forest growth is relatively slow. So you start to find in the advanced capitalist countries, Britain in particular, in the 17th, 18th century, what you have is a situation in which the biomass, which was coming under pressure for agricultural use, at the same time as energy. So you were looking to agriculture to provide the inputs to both industrial energy, but also to provide the inputs into supplying industry with energy. So and food. So you get this conflict between providing energy for the industrial system or provided food for the mass of the population. And this was a serious problem. And it was a serious problem until at a certain point somebody said, well, there are stored forms of energy, and we can go underground. And at that point, suddenly the use of the agriculture to produce energy, biomass, became not as significant and not as important, because you could get it from coal, and later on, of course, from oil and then natural gas. So what we see then is a precursive situation in which capital accumulation was blocked by the requirement that agriculture satisfy these two needs. And then one of those needs is shoveled off and goes into fossil fuels, and that solves the problem. But in the process, of course, fossil fuels produce greenhouse gas emissions, and so we see the rise of greenhouse gas emissions accelerating after 1960 or so, and getting to the point now where they're becoming untenable. So here's a model, if you like, of kind of saying, well, the capitalist economy did very well in terms of organizing things just using the biomass up until around 16 or 1700. And after that point, it starts to get difficult because of the competing claims of agriculture for food and energy. Energy is siphoned off, and so capital accumulation during the industrial era can take off as if it has no constraints of energy production, of energy consumption. So fine, you solve the problem. But that then becomes a precursor of the industrial, of the greenhouse gas emissions. And we're now looking at a situation where we have to do something about the greenhouse gas emissions, because they've become so massive, so concentrated, that they're producing radical reconfigurations of climate change and all the rest of it. So this is, if you like, an analogy I want to use in relationship to fictitious capital. Capital did fine about claims on future labor and claims on the future in general output all the time. The credit system could work in the way that it did, but in so doing, it increased the amount of fictitious capital within the system. In other words, this is a bit like the greenhouse gas emissions. So what eventually happens is that we get capital which is doing absolutely great during the 1990s, say. It's doing fine. I mean, China's coming on board, a huge amount of increase in everything that's going on. total output in the global economy is surging at hugely. Profit rates are reasonably good and so on. So everything is going, pretty good in the 1990s. But then we start to say, well, but more and more are we running into the greenhouse gas problem, but also we're running into the fact that there's an increasing amount of fictitious capital in formation because we're having longer and longer term investments. We're getting much more, fixed capital and consumption fund formation. The dynamics of the system are such that the credit system becomes more and more significant, but the credit system becomes more and more a situation in which the gap between what is imagined and what is really possible starts to expand, to the point where when you start to look at indebtedness on the global scale, we see an exponential growth since 1980. Huge increase in indebtedness and a huge increase in fictitious capital formation, to the point where now fictitious capital formation is the problem. You can actually go out now and instead of investing in production, you can start to trade, stocks and shares against government debt, against carbon futures, against financial currency futures, against. So all of these different markets exist in which fictitious capital starts to circulate in search of fictitious capital, with different qualities of fictitious capital being assessed by the credit rating agencies and all the rest of it. So in a sense, fictitious capital, in the same way that it produces an ambient gas, CO2, in increasing amounts, which then creates serious problems that need to be resolved. So actually, you create an ambient form of capital. That is a form of capital which is fictitious capital, which is circulating in fictitious capital markets. And I, as an investor, when I look at it, I say, do I want to be bothered with doing real production? Or can I go out and speculate on currency futures or something of that kind, as George Soros did way back in the 1990s, and earn billions and billions of dollars just from financial operations? So more and more capital is fictitious capital chasing fictitious capital. And the result of that is that you've got a situation where the likelihood of a major crisis, fictitious capital formation, is clearly there, in exactly the same way that we have a fictitious we've got a crisis of greenhouse gas emissions, which is clearly there. Both of these are, if you like, ambient versions, ambient global versions, and that's the interesting thing about, carbon dioxide as a gas. It's an ambient gas. It's everywhere available, and it's not concentrated in any one particular place for any length of time. The same thing is true of fictitious capital. Fictitious capital is going everywhere. It's rather like the ambient gas. It's everywhere. It's produced everywhere. It's having effects everywhere, and it gets to the point where capital, like I said, can simply invest in capital, which is the definition of a Ponzi scheme, all right, where you actually borrow more money to pay the interest on the money you just borrowed, and you just Ponzi it up like that. Right now, I think myself, actually, fictitious capital is the global Ponzi scheme in which an ambient form of capital is available worldwide for anybody to invest in any time. And people are making their money simply out of speculating on the different qualities and quantities of financial capital that are in circulation. And in exactly the same way that this then leads to the question, how can you extract carbon dioxide from the atmosphere in such a way as to reduce the problems of global warming? Is it possible to geoengineer the system to extract it? And the answers are not very positive on that. And the same thing arises in terms of fictitious capital. Are there ways in which fictitious capital can be sucked out of the system to the point where there's not going to be some almighty crash as we, in effect, have a global Ponzi scheme, which does actually have a certain resonance in different parts of the country. So if you look at third world debt, or emerging markets debt, as people prefer to call it, then in fact you start to see that certain qualities of indebtedness in terms of state debt are varying a great deal, and therefore there is an income spread from Italian bonds and Costa Rican bonds and German bonds and that you can start trading those and making money out of those trades. So we've got an ambient form of capital around us right now. And the ambient form of capital is not terribly benign. And there is a huge gap between the fictitious capital which exists and the real capital which exists. And this is, I think, one of the reasons why I would speculate myself on there likely to be a very serious crash in the financial system, particularly because the fictitious capital is actually built now into a global Ponzi scheme, and that Ponzi scheme invariably becomes undone, except in this case, the Ponzi scheme is so big that you can't afford to undo it. So what you find is that the central banks are, in a sense, half aware of the kinds of difficulties that I'm pointing to, but the difficulties are such that they can only answer to a financial difficulty by issuing more credit money. That is increasing the liquidity within the global system. And every time you do that, you are actually issuing more claims on future labor. To go back to that passage from the Grundrisse, where Marx talks about the way in which future labor is actually contained in present labor within the circulation of capital. The designation of future labor becomes very significant, and that therefore fictitious capital becomes a key element within the global system. So those are, if you like, some thoughts which come out of. But again, I want to emphasize that this is not a deterministic analysis. It doesn't say this definitely will happen. All kinds of other things can go on, and all sorts of other things have gone on in the realm of technological change, technological organizational change, and of course, regulatory frameworks. So it's quite possible that we'll see rather different scenarios emerging in the future. But what Marx, I think, did was to give us some idea as to how to look at the places where new problems are likely to emerge. And the new problems which are likely to emerge are not those which can be addressed by the kinds of politics which are addressed in, say, the 19th century of industrial labor and all the rest of it. They have to be addressed in terms of what is actually going on in the realm of fictitious capital circulation and potential fictitious capital devaluation in the course of major macro crises.
Thank you for joining me today. You've been listening to David Harvey's Anti-Capitalist Chronicles, a Democracy at Work production.